Hi, this is Zak Mir with the Bulletin Board Heroes on Thursday, the 3rd of March. Starting off with Kazar Oil and Gas, and here you can see there's a beautiful saucer recovery here, and the break of the 50-day average 0.26 pence a couple of weeks back. View at the moment is that we're expecting more, possibly much more on the upside. Possible target here as high as the 200-day moving average at 1.32 pence, which is also the top of this notional rising trend channel from October. In the meantime, any dips towards the 0.4 pence zone regarded as buying opportunities, and really only back below that level, and I say below the 10-day moving average at 0.37 pence, would delay the upside scenario. Target for 1.3 pence regarded to be achievable over the next 1 to 2 months. Europa Oil and Gas worth following up on the recent update here. Still looking quite perky, approaching the 200-day moving average at 4.58 pence. Target here up towards this resistance line projection around the 6 pence area. Floor of the channel from October bounced off earlier this month with a gap to the upside, so that is an encouraging configuration. Also a double bounce in the RSI window as well. So if you're cautious on the stock, maybe wait for an end of day close above the 200-day line before targeting 6 pence, but it looks as though the shares are very much on their way. Next up, stock that I don't often look at here, but Intelligent Energy, decent sort of cup and handle type formation here. Looking for an end-of-day close above the 50-day moving average, 52.53 pence, to get it on the next leg to the upside, and perhaps retest 70 or 80 pence later in the month. Stop loss back below the 20-day average, 42.91 pence, which I think should be enforced given the recent history of the shares. Legendary Investments is next, and here we've had a slow build to the upside, still remaining rather slow, but the trajectory here is that of a rising situation. Target here to put towards the 0.2 pence level, especially while we hold above the 50-day moving average zone at 0.12 pence. So decent, relatively consistent channel that the shares are in, even though the near-term action is rather erratic, let us say. Metal Tiger is next, and here we have follow up on a previous call. Consolidation, obviously, after the spike to the upside seen during February, but still looking at this as a positive play. Target towards the 1.5 pence, 1.6 pence area over the next few weeks, and really only back below 1 pence, say stop loss at around just below the 20-day moving average at 1.02 pence, delaying the upside. Only back below this 50 and 200-day moving average area, 0.91 pence would be an outright negative on a technical basis. Next up, Reach for Entertainment, which I haven't looked at for quite a while. Worth checking out the situation here in terms of the technicals, given the way that we've got this consolidation really at the lower levels. 1.5 pence, very much the support area for the shares, and while we hold above that, it's fair to target the 200-day moving average at 1.92 pence over the next month or two. Finishing off with a former favourite, which let us down, let's say, above 0.2 pence. That was the breakdown, I suppose, in November. But we've spiked back quite sharply here. Looks as though on this occasion this could be the definitive move back to the upside, given where oil prices are. Possible scenario here, we hit at least 0.2 pence again, which would be the top of this broadening channel. Above that then opens up the long-awaited 0.25 to 0.3 pence targets. If you're cautious on the stock, maybe wait for an end-of-day close above the 200-day moving average at 0.17 pence before going long at these levels, especially as we are a bit on the overbought side. Ideally, there would be a dip back towards 0.15 pence to buy into, and then progress back towards 0.25 and beyond later in the year. That's it from me. More updates at the same time tomorrow.